Good morning. Welcome to Morning Markets on today, the 16th of April. A couple of things that we've been discussing as an investment team that I wanted to share with you today. The first of which was the economic data that we saw released in the US yesterday afternoon. And this data captured some of the lockdown impact on the US economy. And the information that we got was both around retail sales and industrial production. Retail sales fell 8.7% month on month, industrial production 5.4% month on month. Both of those data points, they are backward looking, they were worse than expectations, but I would caution that it is exceptionally difficult to try and forecast economic activity at this point in time. So the fact that they are below expectations, I don't think we can really say much. What we can say is that they give an indication of the deterioration of the economic situation. Secondly, we had British Retail Consortium data just looking at the UK retail environment for March. And again, they displayed a very similar picture to that which we saw in the US, with retail sales falling approximately 4.3% year on year. It's interesting when you dig into that data in that at the start of March, when the lockdown wasn't in place, we were seeing a very strong growth in retail sales, plus 12% year on year, primarily driven by food as people stockpiled ahead of a potential lockdown. Fast forward that into the lockdown phase, and we see a 27% year-on-year decline in retail sales. So that gives you some indication of the magnitude of the impact that the lockdown is having on economic activity. This sort of negative or more negative economic backdrop did feed into equity markets, and we did see equity markets come off slightly yesterday. I think that needs to be kept in context. We've had a very strong bounce in equity markets from their lows of last month, and that I suppose does to an extent influence how this data is being received. I think the other thing that we discussed this morning was just the increasing number of companies reporting their earnings, and we heard from a number of the large US banks yesterday, and a similar vein to JP Morgan. They are all also increasing their loan loss provisions, so setting aside capital to deal with the problems that may arise in the coming months due to the lockdown and the lockdown in economic activity. That's all for today, so please join us again tomorrow. Thank you very much. Bye.